All right then. So we are now getting down to the ledger accounts. Okay. Now ledger accounts has to do with what we call double entry system. Okay. So we have to what we call double entry system. So under the double entry system, we have one concept in accounting. So the double entry system here, that it means that debit, so we need to debit uh, the receiver and credit the giver. So this is what double entry system is all about. Okay? So the one receiving should be debited. The account receiving should be, okay, should be debited. And account giving should be credited. So this is what happens in accounting, all right? So we now get down to what we call question that we need to actually look at, okay? So the question that we should look at now here is as follows. Hello? Yeah, so here this is what goes on. Double entry system, they debit the receiver and the credit the giver. So you debit the receiver and credit the giver. So the account receiving should be debited. And of course, the account giving should be credited. All right, so without wasting much time here, using at least accounting principle here, we need to actually now look at this question so that we look at the double entry system and balance of the accounts. A new company called Monze Enterprise Trading was registered with Pakra and started operating on 1 January 2015. The following introduction took place uh, in the during his first month in business. 1 January 2015, capital was 160,000 was paid in cash by the shareholders. So capital as always a credit balance. Okay. So we're going to open a cash account in this case. So open up a cash account. So we open up what we call cash account. Cash account, what is going to happen to the cash account is that in this side is a debit. This side is a credit. So from here, all what is going to happen here is that we need to Um, yes, I don't know why you. Okay, let me just pause. All right, so the debit and the credit. So from here, you check on the debit. This is on the 1st January 2015. So 1st January 2015. Um, we have the 1 January 2015. Okay, so 1 January 15, we have the capital. How much capital do we have? The capital is 160,000. So capital is 160,000. All right, then that is on cash because capital account is always capital account always as a credit balance because you're giving away. So capital, credit, and debit. So what simply say 10115. This one went into cash. The amount is 160,000. This is about the basis of a double entry system that we are actually looking at. So that answers the first part of this problem. So on this one, that one goes. On 2nd January 2015, so 2nd January 2015, the company paid 145,000 of the cash into the business bank account. So we're going to open up the business bank account. So we're going to open up what we call bank account. Bank account as well. Here we're going to have a credit. All right, so this is what is going up on. So we continue. All right. Your the the bank account that you're going to open here on this date on 2nd January 2015, company paid 145,000 of the cash into the bank account. So they paid 145,000 of the bank account, 145,000 of the cash into the bank account. Okay. So meaning that on this date, um, 02 01 15 cash. They paid 145,000. So 145 pin. All right, so of the capital into the bank account. The question says they paid one for the company paid 145,000 for the cash into the business bank account. So the cash account, we are going to actually go to the cash account. All right, so cash account here on this date 02/01. So in this case, it will be 02. Okay, so 02/01/15. Okay, so this man is going to the bank. So they're paying from the cash goes to the bank. How much? 145,000. So they're paying 145,000 from the okay cash account to the bank on that date. The date is known. The date is 02/01/2015. So we are still looking at the double entry system continuation for this one. So we are done with this transaction. On 6, the company bought a van on credit from Toyota Zambia of 40,000 kwacha. Okay, so we're going to open an account called van account. So open a van account. Open an account called van. So van account. So this is on 6/01. Okay, so there's no problem here. We can just come up with appropriate accounts. So van account. This was bought on 06. Okay, so the van account was born on what? 06/01/15. You will put Toyota. Okay, so you are going to put here what we call Toyota Zambia. It was on 40,000. Then you open what we call Toyota Zambia account. Toyota Zambia account. So 06 on credit because they had given away according to the accounting principle. This was giving away a van for 40,000. All right, then we move on to the other transaction that took place. That transaction that took place was on is the company rented the shop premises for 3,000 a month, and the company paid for the first month immediately by check. Paid for the month immediately by check on 6th. So shop premises. We're going to have a shop premises account. We are going to have what we call shop premises. All right. So we have the shop premises account. Of course, this one is a debit and this one is a credit. So shop premises was 3,000 06 01 15. This was by bank 3,000. When we come the other side here, we go to the bank account. Okay. So 06 01 15. You're talking of premises 3,000, but it came away from the banking sector. All right. So we move on now, getting down to the other parameter. So let's answer this one. The company purchased goods from Cargo Limited for 4,010 January 2015. So purchases, so you put purchases. Okay, so you're going to open up an account called purchases account. Purchases account. So this all is only 10 01 15. And this came from Carway, 44,000. Okay, this is what they're saying. 44,000 on 10th January. Then you're going to open up an account called Cargo Limited account. Cargo Limited. AT account on the debit and on the credit. This is on the 10th, low one, 15. What you call purchases. $44,000. All right, so Cargo Limited account, we have this one. That answers that part on 10th. All right, so we move on. Okay, so we Now go down to the other agenda. So the other agenda is that we need to check company for shop expenses by check. So shop expenses by check amounting to 1,500 on 10th January 2015. So they paid for shop expenses. Okay, so we go and find the shop expenses, 1,500. We'll open account called shop expenses. Okay, so we open an account called shop expenses. All right. So we're going to our shop expenses. Under shop expenses, here we have a debit and credit. Okay. So just to write properly on this one. We have what we call shop expenses. So the board shop expenses, okay? The board shop expenses, the company paid for shop expenses to 1,500 by check. So we are going to debit the shop expenses account on this date. Because we need to take the date. The date was 10th January. So date was 10th January, 10/01/15. So this was by bank, 1,500. Then you go to the bank account. The bank account you credit. So 10/01/15. So here we are talking about what? Shop expenses. So shop expenses, 1,500. All right, so we move on now. That one goes. Okay, so now that's what happened. Then the company purchase good from company limited. Okay, Roseanne one, that one is already gone. 1,500 is already gone there. Then we go to the other one. The other one says the government sold goods on credit to Chivombo for 80,000. So it's sales and Chivombo, 80,000 on 11. Okay, so we're going to have sales and Chivombo. So sales account, this is on 11/01/15. We have Chivombo, 80,000. So 80,000. So now you get into Chivombo, they sold good to these people. So 11/01/15 sales 80,000. That clears that. Then we move on to the company received the check from Chivombo, 70,000. This check was paid immediately into the bank account, 20th January. Okay, so Chivombo paid. So on 20, so 20/01/15, this went to the bank, 70,000. Then you go to the bank account,